Welcome back. I'm Pratap here. Today is the 24th October 2024. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you can find the tab post. Some of you might be seeing the tab community. So you just click on the tab, you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. Now you need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen our skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description you can find the link and join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other very important updates, we will be providing at our Telegram channel. Now let's get into the analysis discussion. In the previous end of the day report, we identified 6 high liquidity zones from daily and 75 minutes time frame. We got a very good trades. The first one is Asian Paints rally base rally is a daily high liquidity zone. Previously, I already explained how I fine-tuned this zone. Probably a few days back, probably on this Friday candle, our software might have reported, on the next Monday analysis I might have explained you how I fine-tuned this zone. So this is a daily zone we fine-tuned with 75 minutes time frame. Here we have a fine-tuned 75 minute zone drop, 4 base candles and a rally candle. Within this 75 minute zone, again drawn the 15 minutes time frame zone. Here we have this is a leg-in. I considered this as a leg-in candle and then base candles and then a rally candle. This is the way I have drawn the 15 minute zone. And within this 15 minute zone again fine-tuned with 5 minutes time frame. See here you have a drop candle, 2 base candles and a rally candle. So to minimize the risk, actually previously I shown maybe it is a drop base rally. This is the initiation. But if you use both the candles, it is going to be a very clean and neat trade today with small entry buffer. And if you fine tune up to this drop base, this is also part of base. By ignoring, you minimize your risk. Probably you have to use maximum entry buffer to get the trade, your trade executed. And these 2 base candles, this is going to be a perfect trade. And also we planned a rally base rally. This is an aggressive trade setup because there was a price action clue. Prices came near to the zone and then moved up. That I will show you. And here drop, 2 base candles and rally. And this zone has been tested for several times. So we thought this could be a high liquidity zone. Not only that, again drop LOTL zone is created. Here this is the drop base rally. This is the leg-in base rally. That way also you can drop. So this is a LOTL zone. Generally these LOTL related zones will be created from high liquidity zone. But actual orders will be picked up from this area. So we thought this could be a high liquidity area and we can plan a trade in case if prices are entering here. So like that we have 3 order flows, 2 are aggressive trade setup. This is a 5 minutes high liquidity zone but not a fine-tuned zone. So it is an aggressive trade setup. This rally base rally is also an aggressive trade setup because the prices came near to this zone. Let me show you that. Here. Prices came near to the zone and again see the rejection and the movement. A huge move. So that's why we thought this is the area we are having a very strong institutional order flow. But unfortunately today, the 5 minutes aggressive trade setup is easily violated. This is the first candle and the second candle, it is pierced After that, clearly violated. But anyway, after that, what happened? Prices came near to this, the fine-tuned 5-minute zone with small entry buffer. You would have got the order. Suppose if you would have reduced risk of this particular zone with one base candle, then you have to use your maximum entry buffer to get this trade. But anyway, here we have a 15 minutes target zone. I consider this as a ERC candle. This is the leg-in. We have a base and drop, and prices reached this target, and also it has given 1:3 RR from this zone with some entry buffer and stop buffer. It gave 1:3 RR. And when we got the trade at 12 o'clock. We got trade at 12 o'clock, 10 minutes, 5 minutes candle. We got the trade, and it reached the target at 3 o'clock, 5 minutes candle. So how much profit Asian Paints has given, and how much loss first aggressive trade setup has given? Let me show you in the Excel sheet. So here the first one, aggressive trade, 5 minutes aggressive trade setup is violated. So we got a loss 1020 rupees, and ROI, negative ROI is 1%. So 1% loss on our margin amount. That was your investment. Okay, when it comes to the second trade, 6,330 rupees profit, which is 6.1% ROI as per one futures margin cost. From here to here, it has given 6.1% ROI. So this is about Asian Paints. The next trade we got is Motherson. This is a daily 75 minutes high liquidity zone. So this is the 75-minute zone. We have a drop. 6 or 4 base candles are there. 1, 2, 3, 4 base candles and a rally. Drop, base, rally. This is what our software identified. This one is fine-tuned with 15 minutes time frame. Here we have a drop, base, rally. Within this 15 minutes, again you have a fine-tuned 5-minute zone. This ERC candle I am using as a failed ERC, as a leg-in. You have a base and a, this is also, see, rally candle is also a failed ERC candle. But we are using this as a leg out. I told you some exceptional scenarios we can use a leg out. This is one exceptional scenario. Why? Because see the movement, look into the dynamic view. Once prices reach to the bottom of this, the low of this candle, and after that, see, the prices were rallying, and finally it closed. So that means this entire candle looks like a rally candle. After that, prices didn't go down. Suppose moved up and again came down and closed in the middle of this zone, then this is not a valid leg out candle. See, finally the price is closed completely outside the zone. So in such kind of exceptional scenarios, you can, at some point of time, it looks like a big rally candle. Because that kind of view it reflected, definitely you can consider this as a leg out candle. Finally, at the time of closing, this entire candle looks like a rally candle. Then only you have to use failed ERC candles as leg out candles. Okay, and this zone is tested several times. See, this is the first test, and after that the second and third test, and today fourth test, third test and moved up, fourth test moved up, and today again it gave fourth test within this zone. This is our target, 15 minutes target. This is the one. This is a ERC candle as a leg-in, 3 base candles and a drop. This is our target. But unfortunately, prices didn't reach our target. Then where to exit? Look into this 5-minute zone. See, when we planned our trade, we have 1:3 RR is there. But in reality, 1:3 RR is not achieved today. Why? There is a 5-minute zone that is preventing the prices to go up. This 5-minute zone is acting as a high liquidity zone. Drop 2 base candles and drop. This is acting as a high liquidity zone. See, it is holding the prices first time, second time, third time, fourth time, finally at the time of closing. Probably when it is holded first time and prices came down, and again holded third time, again prices came down again. At least here you might have realized and you might have exited, because almost at this time, this is 1 o'clock 50 minutes. So we are nearing to the closing hour of the market. Maybe in another 1.5 hour, market will be closed. Definitely you should take a decision. If you would not have taken a decision, maybe at the last moment of closing session you got around 3 o'clock 25 minutes, prices reached this zone. Let me go to the 1 minute, you get clarity. See here, this is 15:25. Now you would have exited. Until this time you would have holded your funds. Maybe if you would have exited in one of the in this candle, probably your money would have been released just 1.5 hour before market closing. See, especially last 1.5 hour, you need to take some quick decisions, whether to wait or hold. See, if this trade would have been at morning 11 o'clock or 12 o'clock, if this candle would have been at 12 o'clock, still you would have waited. There are higher chances this zone may be violated and prices further moved up. Now the time is not there. Still if you believe, say what happened? Prices once again reached, once again entered into this zone, because this is high liquidity zone, again it pushed the prices up. And again reached this 5-minute zone. You may ask a question, suppose if we exited here, our funds are released, can we take another trade here? No, you cannot take your another trade. Now you are not getting in the RR till this 5-minute zone. If RR is there, 1:3 RR, you would have taken a trade. RR is not there. But why we took a trade? Because initially this 5-minute zone we didn't assess. Because it didn't. This is a normal 5-minute zone. After the price action, we concluded this could be high liquidity zone and holding the prices. But at the time of planning your trade, 15 minutes target is your mostly it should reach, and you have 1:3 RR is available. Excuse me. Because 1:3 RR is available, and this is a fine-tuned zone. Actually, if you draw zone like this, you don't have 1:3 RR. What we did, we reduced the risk until we reach 1:3 RR. Somewhere here it got 1:3 RR. And with near this area, we planned our trade. This is our entry. This should be our target. But finally, this 5-minute zone prevented. Because it is prevented, at some point of time, we took a decision and you might have exited here. The worst case scenario, almost at the closing of the market, you might have exited. Maybe sometime you might have exited in the middle also. You would have collected only some taxes still. You would have got profit. But here at least we got 3.5% ROI we got by exiting in this 5 minutes high liquidity area. Motherson has given 3.5% RR. It has given 10,000 rupees profit based on one futures margin cost, because Motherson lot size was around 2,99,000 something it is there, close to 3 lakhs. So that's why you got only 3.5 ROI, even though you got profit 10,000 rupees. Because your investment is more, margin cost, ROI is reduced. But otherwise it is a fine-tuned zone. What kind of fine-tuned zone? A 5 minutes fine-tuned zone, and that 5 minutes fine-tuned zone is acting as a high liquidity zone. This is not an aggressive trade. This is a fine-tuned zone, but the fine-tuned zone is acting as a high liquidity zone. That's why it is supporting multiple tests. See, this is the 4th test and even 5th test. Again it pushed the market up. But only till 5 minutes high liquidity zone area it pushed. So this is about Motherson, you need to understand. Next one is Siemens. Simmons has given 3 trades today. This is also a 75-minute zone. We have a rally candle, 4 base candles and a rally candle. Oh, sorry, maybe this is the one. Rally, 2 base candles and rally. Or software, maybe this is a rally and 3 base candles and rally. Because the zone is ended. This was the rally candle as per our software rally. This is the leg-in candle, 3 base candles and a rally. Or maybe rally, 2 base candles, rally. Either way, this zone, I didn't exactly remember, but zone high is, this is the one, zone low. So this is the rally and 2 base candles and rally. This is the way software identified. And this zone is fine-tuned with 15 minutes time frame. We have a drop, 2 base candles and a rally candle. Drop, base, rally. This is the fine-tuned 15-minute zone. And not only that, I also identified at the at the distal line. At this distal line, there is one more rally, base, rally. The 15-minute zone, rally, base, rally. This rally, base, rally is the origin for this entire 75 minutes high liquidity zone. Of course, there will be a fine-tuned 5-minute zone will be there, but before that, this 15-minute zone is the origin for this entire 75 minutes high liquidity zone. That means we have two fine-tuned 15-minute zones are there, but this 15-minute zone is already created before the 75-minute zone creation, but overlapped at the distal line. That is at the stop loss line. Okay, next we have a 5-minute zone at 5 minutes time frame. We have a fine-tuned 5-minute zone here. See, we have a rally, 2 base candles, rally. Again drop, base, rally. Probably this might be acting as a high liquidity. We are not sure, but 80% level, our assumptions, the reason is this is again created a new zone from this zone, picked up the orders, created a new zone, LOTL zone is created, drop, base, drop. So this is the way you can plan multiple trades in this area until it is violated. A 5 minutes high liquidity, the chances are high because of LOTL zone creation, because LOTL zones many times it will be created from HLQ zones. And okay, this LTF, lower time frame zone as an origin to the higher time frame, this is the 15 minutes. Inside 15 minutes, again you have failed ERC candle as a leg-in, you have a base, you have a rally. So what I did, because the price movement is exactly in the middle, I consider this could be like a drop candle dynamic viewpoint of view, because body is very small, ignore the body. And this entire thing we have drawn as a 5-minute zone. This is the 5-minute zone, this is the low of the candle, because the drop candle, low of the candle also, leg-in candle also we consider, and this is the rally. So this is the 5-minute zone. This 5-minute zone is the origin to this. See, it picked up the orders from this 5-minute zone and then market started moving up. So that means in this area strong order flow is there. Today we got 2 trades from this zone, fine-tuned 5-minute zone, and 1 trade from this origin. Let us look into all the trades. See here, drop, base, drop. I consider this is our target, 15 minutes target. See, this is the fine-tuned 5-minute zone, and we got 1:8 RR till this 15 minutes target zone, 1:8 RR we got. 1:8.2. So today morning 9:15 candle, prices entered into this zone, and see how sharply prices moved and reached this target, and this target zone is pierced after that. It's violated. 5-minute zone. If you look into 1 minute time frame, look into this. Today in this fine-tuned 5-minute zone, prices entered, sharply moved up and reached the, and when this is the 9:15 candle, and it reached the target at 9:20, within 5 minutes, it gave you 8.2% RR it gave. But the problem here is 9:15 minutes candle execution of the trade is not practical. It is only theoretical. Okay, sometimes your trade might be executed. You are a lucky person. That's why records point of view, we are just capturing this trade. But this is, remember, this is not a practical trade. There are several reasons behind this. There is no guarantee that prices really reached this area, because market morning 9:15 candle, many times freak trades will take place. What is freak trade? Some slippage in the market, software, algorithms. See, somebody, what they do, they keep 1 or 2 trades in this area. Just 1 or 2 trades. In this area, the high liquidity zone, the fine-tuned area, they might have kept. And so many orders will be there. Lakhs of orders will be there morning 9:15 candle. What software will be doing? Some people will keep market orders. Some people will keep, limit orders. Limit means you quote the exact price. Market means whatever the price it will take. Some person requested, want to buy here, and you want whatever the market you want to, whatever price you are accepting. At the time, what happens? Morning 9:15, so many order flows are there. The algorithm, some slippage will take place. We call them as freak trades. And your 1 trade or 2 trade, what you executed in this, that will be executed because of somebody's market order. Just fraction of a second, these trades will execute, and immediately they go back here. But because your 1 or 2 trades are executed, it looks like a long wick. But actually, they may not be the real trades, freak trades. Some slippage in the software algorithm because of heavy order flow in the morning 9:15. These things will happen at the exchange. Rarely it happens. Software algorithms are improved a lot nowadays. Still, once in a while that will happen. But some 15-20 years back, it was a regular scenario in the market. Freak trades execution almost every day, almost every stock. So lot of improvements has been taken in the software algorithms, but still, because of market order, some people are placing. Sometimes this kind of slippage you see in the algorithms. Due to that, freak trades will take place. But your candle reflects a wrong. See, looks like a very long wick. In the real, maybe up to here only the prices were fallen down. Here only the maximum order flow is there. Let us assume, let me draw a blue color line to make you understand. See, in this area, until this area only prices would have come down. Because of that freak trade, 1 or 2 trades executed. Due to that, see, a long wick it is showing. But we never know this is because of freak trade or really prices came throughout this day, throughout that 1 minute, and finally it moved up. It's very hard to observe because everything will take place in fraction of a second. In that scenario, execution of your orders in this zone is not practical. Because the chart is showing we are capturing this trade. But to be honest, it may be executed or it may not be. This trade may happen or may not happen. The real trade may happen or may not happen. We don't know it is because of the freak trade or because of the real trade. But anyway, according to the chart point of view, our fine-tuned zone inside the high liquidity zone work, and gave a successful trade by reaching this target. But is it real? We don't know. But see here, next time let us assume this is a freak trade. Let us assume no trades executed. This candle, we can ignore this candle. Next time again you see, prices entered this zone when this happened in morning 9:46. Definitely morning 9:46 candle, prices came and the orders are executed, and then the order flow pushed the prices. Now prices were started moving up and down, and finally reached this target. But this is already a pierced zone, or maybe this is a violated zone. But still, why we are considering? Because many times within this area, even though it is pierced, again and again it is moving within this area. Prices are moving up to this area. Maybe it could be a pierced zone or violated zone. But still, institutions might have added a new order flow into this. This is still pushing the prices down. At some point of time, if not here or here or here somewhere, you have to exit your trade. That's why I told you, sometimes even pierced zones also we use for target point of view, not for the entry point of view. And moreover, good RR is there. We have 1:8 RR is there. It reached 1:8 RR, expecting even more and more. Rarely happened, but it is greedy. If you are thinking maybe it will further move near to this zone, because yesterday some of you asked in the chart group, for you this is a good classical example. Because it is a pierced zone, you are expecting even more it will go. What you do, here you use a trailing stop. So you are using 1 minute trailing stop loss near the zone, not from the entry point of view. See, in this candle it is violated. Now you will exit. That kind of mechanism you have to implement if you are expecting prices will further move up. You got the clarity. You should not start using from the beginning of where you got the entry. You should not use the trailing stop from the entry point of view. The decision making should be near the zones. If prices were not moving up, it turned back. Probably here you will exit. So some of your profit will be reduced because it didn't work out today. 1 minute trailing stop losses are very, very sensitive. Why they are very sensitive? Because the duration is very small. Especially markets are lot of in swing, many swings are taking place. The momentum is the momentum, lot of momentum, up and downs are there. At the time what happens, many of these 1 minute zones will be violated. They will be violated downside and also they will be violated upside. That's why it is quite dangerous. Some experience you need to have. One best opportunity is when you really want to know at your target zone, because this is already a pierced zone, you don't want to take any risk, because pierced zones order flow is gone. But sometimes institutions add new orders in that area. That may not be reflected on the charts. If that is the case, it will be pushing the prices down. If that is not the case, prices will be moving up. A new 1 minute zone will be created here, somewhere here. Now you will trail this stop loss to within this area. Now that way you get more profit. So that's why you need to take your decisions at the key movement areas. If you are expecting more targets at the key movement area, you need to take your decisions. Sometimes multiple 1 minute zones will be there, but there could be some high liquidity 1 minutes will be there. In between any other 1 minute zones are violated, you just ignore. But the key 1 minute areas like high liquidity 1 minute areas, if that violates, then probably you need to exit from your trade. That kind of decisions you can take. Sometimes you take 5 minute zones. You go to the 5 minutes time frame. Any 5 minute zones are there. Probably that you have to keep. But anyway, here there are no 5-minute zones here. Okay, I'm calculating up to this 15 minutes zone what we identified, drop base drop, but this is only pierced zone. So pierced zones can be used as a target. So that's why next time when it reached, when we got the entry, second entry, this is the first entry. First entry is real or fake, we don't know. It is because it is a real trade or freak trade. Due to that we got this freak trades, maybe you may not be getting opportunity for the trade execution. If it is a real entry, because of the huge order flow, it came down and stayed here for some time, your trade also might have been executed and you would have got a good profit. But this one is a clean trade, the second one. This is a guaranteed trade and you would have achieved 1:8 RR within how much time? Go to the 1 minute time frame. When you got the second trade, you got 946, and when it reached the 15 minutes target, $959. 946 you got. In 13 minutes, your trade is completed. How much profit you gained in 13 minutes? Siemens, we got 16,665 rupees profit, which is 7.9% ROI. This is morning 9:15 trade. We don't know whether this is because of freak trade or a real trade. But this is a guaranteed trade. The second one. Because both the trades worked from our fine-tuned area, we have captured these both. And the third trade also executed. And the third trade is not from the fine-tuned area. Now this fine-tuned area is no more. Now prices further came down. And here you have a a 5-minute zone as an horizon. The 5-minute zone as an horizon to this 75 minutes high liquidity zone. Of course, this 5-minute zone is a fine-tuned zone inside 15-minute zone. And here you have the actual institutional order flow is there in this area. So that's why we went to this 5 minutes zone, prices entered. But today what happened? Prices went a little deep inside. It didn't cross the distal, deep inside. If it went deep inside, maybe next time the chances of taking a trade in this area is reduced now. Because a lot of order flow has been consumed within this area. But we took our trade here. See, our trade is here only. Our entry price 6739.80 paisa. So this is the area. This entire thing is our risk. Okay, we got the trade. When we got the trade, in this candle we got, sorry, at 12 o'clock candle we got the trade. And what about our target? Because a new 15 minutes zone is created again. We have a drop, 2 base candles and again a drop. This 15 minutes target, the previous one is revised now. The target is revised because earlier is a pierced zone. Now again a new zone institutions created. Now till the new target. And when it reached the new target, at 12 o'clock 45 minutes candle, it reached the new target. So within 45 minutes our trade is completed. How much profit it has given now? Siemens has given 15,112 rupees profit, which is 7.2% ROI. Because earlier we got almost 1,500 rupees extra profit we got earlier. That's why 7.9% ROI. Now it is 15,112. It has given 7.2% ROI. Best scenario, Siemens has given you 3 successful trades. Worst scenario, Siemens would have given you 2 successful trades. First one could have been a freak trade, which won't be executed for us. Okay, so this is about Siemens. Next one is Obra reality, very important trade. A lot of observation is required to get this trade. This is a 75 minutes high liquidity supply zone. A drop, 1, 2, 3 base candles and again a drop candle. This is what our software identified. And this one we fine tuned with 15 minutes time frame. Here we have a fine tuned 15 minute zone. We have a rally, we have 3 base candles and then we have a drop candle. This is the 15 minute zone. Within this 15 minute zone we have a fine tuned 5 minute zone. Only one fine tuned 5 minute zone and which has been tested. See, we have a rally, 2 base candles and drop. This is a tested zone. Okay, tested zones because the risk is very big. Can we take type 3? So even that I tried. I made it type 3. Type 3 is also tested. See here. Type 3 is also, because the type 3 is also tested, no more we can plan a trade from this zone. It is a very, very high risk. You can plan trade only if it is a high liquidity zone. See, today this zone is violated because it is already a tested zone. But a little above it picked up the orders. Why? What is the reason? What kind of zone it is? This is a 1 minute zone. Why we gave importance to this 1 minute zone? Aggressive trade setup. Why? What are the reasons? Because it is having a pro gap 1 minute zone. And also these price actions are near to this zone. Rejections near the zone. We have 2 price action clues. Look into this 1 minute zone. We have a rally candle, we have 3 base candles, we have a drop candle. How, see, previous close, from this previous close, today's in this candle open, there is a gap with a gap down, 1 minute gap down. So this indicates there is a strong order flow in this area, within this area. And see here, prices came down and again they were started moving up. Just before entering into this zone, they were started moving up again. If you draw week to week, you get even better clarity. So almost near to the zone they came and again they were started moving up. Okay, risk management point of view, type 2 proximal we planned. We have 2 price action clue. One price action clue, pro gap. Second price action clue, prices were moving against this particular zone. Prices are moving against the zone when they are nearing to the zone. We called it as like rejections, moving away from the zone. Prices again came, again see sharply prices were moving down. Okay, this I am not considering because this is, we have a fine-tuned 5 minute zone. That order flow pushed these prices, not because of this. And all these order flows created here, again, institutions might have kept some more order flows here. Already pro gap is there. That indicates there is a strong order flow in this area. But that is 1 minute level. You should not forget that. But still, why we are considering our zone is a high liquidity zone. High liquidity zones, order flows are much stronger. So that way prices entered the zone and immediately they were started moving down. Then what could be your target? 15 minutes target is very, very far away. Here you have the 15 minutes target. Of course, this is a pierced zone. But entering in this area, because they go, whether prices will be entering up to here or we don't know. Because 5 minutes candle, you see sharply, this is a morning 5 minutes candle. From here it picked up the orders and again strongly it moved. We don't have any clarity whether it will reach or not. But we planned our trade, okay. But what happened? Again a new 15 minute zone is created. We have a drop, base, rally. When drop, base, rally, then immediately from here, you need to change your new 15 minutes target. So in the next candle prices reached, you need to exit your trade. You need to book your profit. Of course, this is violated, but we can't expect that this will be violated. It will touch sharply, it may move up. That also possible. But we have to book our profit here. This is one reason, and another reason also there. Go to the 1 minute. 1 minute there is a rally base rally is there. Rally base rally 1 minute zone. This is acted as a high liquidity zone. This is the first test, this is the second test, and this is the third test. And moreover, the 15-minute zone is also created at that time. During this test, 15-minute zone is also created. See, drop, base, drop, and then prices reached here. That's why we don't have any clarity. We have a 1 minute zone, and 1 minute zone is the reason for this 15-minute zone. There are higher chances prices will be moving from here. So you need to book your profit within this 15-minute zone level. If not 15-minute zone, at least this 1 minute zone level a little below. Either way, you have to plan your trade. But anyway, according to our rule, 15 minutes is the target. So I consider exit point is at the 15-minute zone. So this is the way, this is our entry. This one we have to delete this because this is already a tested zone. Just for our study purpose, I just shown you that zone. But this is our real zone. This is an aggressive trade setup, 1 minute aggressive trade setup because of true price action clues. One is pro gap and the second one is there are also price rejections. That means prices were moving away from the zone. See here, prices came, moved away from the zone. And today we got the clean trade and reached this 15 minutes target here. So how much profit it has given? Oberoi Realty has given a profit 19,950 rupees profit, which is 6.7% ROI as per one futures margin cost. And this is 1 minute aggressive trade in 75 minutes, high liquidity zone, price action clue, pro gap and rejections. So these 4 stocks we got successful trades and 2 stocks we didn't get the trade. One is Axis Bank. Axis Bank is a daily zone, daily high liquidity demand zone. Price just touched the zone but not entered into our fine-tuned zone. So what is our fine-tuned zone? Go to the 75 minutes time frame. In the 75 minutes we have drop, base, rally. This looks like a failed ERC candle, but add the hidden body. If you add the hidden body, it is a rally, 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 rally. After that, this is a long wick. We got a sufficient body. Prices complete body went out of the zone and closed outside the zone. That's why this is a valid 75-minute zone. Inside the 75-minute zone, again we have a fine-tuned 15-minute zone. See here we have a drop, we have 3 base candles, and then again you have a rally candle, again with hidden body rally. And within this 15 minutes, now we need to fine-tune 5-minute zone. But interestingly, we got a fine-tuned zone is there, but that is at the lower time frame zone as an horizon to the higher time frame zone. The actual order flow created a long before. Here there is a fine-tuned 5-minute zone, which is the horizon. See, we have a rally, base, this is the legging, base, rally. This 5-minute zone is the horizon for this entire 75 minutes high liquidity zone. Of course, it is also overlapped with fine-tuned 15-minute zone, but at the distal line. See, from this 5-minute zone, this entire 75-minute zone is picked up the orders and then moved up. And this 5-minute zone is also acting as a high liquidity because multiple times it is tested. Earlier also it tested. Now during zone creation again tested. And somewhere before today also again it tested once. See here. When it gave the trade on 17th October. And today we are expecting, but unfortunately prices did not enter into the zone today. See, lesson 22, very powerful concept. Lower time frame zone as an horizon to the higher time frame zone. Many successful trades we got from this concept. But today we didn't get trade from this zone. But today we got the trade from Siemens, right? Siemens is a 5-minute zone only. We got third trade. So Axis Bank we didn't get a trade. And another one we didn't get is IEX. IEX is a 75-minute zone or a daily zone? It is a 75-minute zone. No, it is a daily zone. This is what we have: a drop, 2 base candles and a drop. This is the 75-minute zone, fine-tuned with 75 minutes time frame. Here drop, 3 base candles and again a drop. This is again fine-tuned with 15 minutes time frame. This one drop, 2 base candles, 1 medium candle also part of the zone, and then you have a leg out. This is the 15-minute zone. Next, a 5-minute zone. A fine-tuned 5-minute zone, we have a rally, 2 base candles, a drop and follow through candles. So this is the area where we planned our trade. But today prices didn't enter into this area. So these are the high liquidity zones, and we got a very good trades from today. Only one stopped out trade. Remaining all are very good successful trades. And a few trades are very tricky trades. With proper observation only, you might have observed those trades. Okay, hope this information is useful to you for improving your skills. Let's all meet again in our next video. Thank you.